Hi, everybody. I want to welcome our viewers from investing.com this morning. Hi, Scott, Sinatra, Ben, Brock, Sehu. Everyone doing okay? All right, have an interesting guest today at Notorious Alerts. So we're going to see what is notorious about his alerts. So looking forward to interviewing Mac at the top of the hour. Starting off with crude, attempted to make a new high. It's possible because of this, but the S&P's recovered to make a new high for this move. Look at this, how it's glaring divergence. And since we're on investing.com today, I just want to take a look at some of the leadership that we've had here. Here's Apple. It looks like it's distributing and vulnerable, not making new highs. At NASDAQ 100, you could call it rotation and rationalize it, but it was the leader and it's no longer leading. There's Microsoft, well off the highs. We'll see what happens at 200. It's a big level. 200 is a very big level. If we take out this big round number at 200, there could be some problems in NASDAQ. Let's take a look at a couple more of the fangs here. Google has one of the strongest charts left here. Looks like, could put in a new high, no problem. Here's Amazon. Amazon so far looks like a failing rally, and this is with S&P's making new highs. I just want to point this out. So if you go to the NASDAQ 100, which is up about the same percentage pre-market, let's look at this high, okay? So this high equated to this in the S&Ps, right? So we've had 1, 2, and now a third higher high, while NASDAQ actually did not make a new high here. This high was set 11,071, and the key reversal, it was the same high. Probably would have been a little more bearish if they had made a marginal new high. But the underperformance of NASDAQ, I think, is a warning. It's not, there's not a fire in the house, but a warning that leadership is shifting. And yes, of course, it's rotation, people going to other stuff. But what led the way up could also lead a correction. So just to be aware of that. Metals, gold made new highs for the move up here, 1880s. So we're only about 20 bucks away from all-time highs here. And last night in silver, I actually had a successful trade here on you look at the 2-hour, you have a 1, you have a 2, you have a 3, and we've come off a little bit, and silver's down 32 cents with gold higher and making new highs. So silver made this new high here, and look at the RSI reading. I think you could be patient now. I'm not going to tell you to short it, but I think you could be patient now, and that Steve wants to be a buyer at the major breakout, which was right here. There you go. This was a pretty major breakout. Right here at 19. So the potential of pullback there for fresh longs. Be patient and let the market come to you. It's possible over the next week or so. And that, from the lows we had at 11.5, this would basically just be a, fib retracement back at 19 bucks. Anyway, don't chase it. You want some of the shiny stuff, wait for a pullback. Okay, and it's interesting, the yen keeps trying to hold this level, keeps looking like it's going to break down here, here. And if we start getting through 740, I think we can make a move up towards 108. In fact, here's a freebie. Here's our active pattern in play, and we've really been trading very well. The team's been doing great. So I believe it's Grega. Yeah. He's calling this an impulsive bullish turn. Okay. So as long as we hold that, and he's long from around here, a little longer, he's looking for 110. And of course, it's invalidated under 106, which is what it's been holding. So, you know, on the verge of turning good, and if his targets are right, that's a big trade. So that's a nice freebie for you guys that are not subscribers. Anyone here, if I could talk Joe Perry into speaking with you to give you an additional discount, because we're not going to have a promotion probably till the fall. So are you interested, Amira? You want to talk to Joe? Or you just like the chart? Okay. I think Joe was having trouble getting into the webinar. Are you here, buddy? Anyone else? I know that Joe's offered some nice prices for people that subscribe to a 6 or 1 year. So Amira, it'd be great to have you as part of our family. Anyone else out there?
Hey, Coach, I'm gonna type in Joe's email on the chat box. Okay.
Oh, okay. Thanks.
Good morning.
Hello, Khalid. How are you? So Stella's punching in Joe's email address. Just tell him you were at FACE today. And Dale talked about a discount on a 6 or 1 year subscription. Okay. And Joe will work it out with you. Everyone cool? There it is. Okay. So what else is there to talk about? Euro holding up better than pound. I was actually thinking Euro pound was going to roll over, but we're sure taking a lot of time from this 61.8 level here. It looks like it wants to still go. Okay, so I really don't know what to do there. You know, with a lot of things right now, I feel a little late to be shorting the dollar down here. And I'm not sure I want to buy it. It's way overdue for some type of pop. You know, you have to go with the trend. It's down unless we would get back above this breakdown. The previous lows of 95.70. So that's 70 points away. And it's never too late. Okay. So looking at Canada, with the oil possibly topping, starting to diverge. And Euro, I think Blake's looking for 117. So, okay, let me just show you this. May have taken it off. Nope. So we don't always say that. Blake is long from full size, 113.70, and now he's looking for 117.89. Okay, so ForexAnalytix made a lot of money in their pips being short the dollar. I could go back to closed pattern in plays, being long the NASDAQ, the Kiwi, being long Aussie. So I don't think that we got caught being bullish a dollar on this breakdown. I just like to warn people that after a move has been extended, that you wait for rallies to do it. And there have been decent bounces in the dollar all the way down. There was this. So when I would say something like, don't short it down here, you know, you had a chance to buy the dip. Same thing happened in Euro. There were lots of dips to buy right here, very shallow. never said that the dollar was going up, because all the euro did was this, move sideways. And we'll see what it stretches to. Dollar bears are looking for sharply lower levels. I'm thinking that we go to maybe, before it's all over, the 92 range. Of course, we still have this low to contend with, but getting a lot of stuff measuring towards this 92 level. That would take it to Blake's target in euro. So great trading by you and the team on dollar weakness here and precious metal strength over the last month or so, Blake. Congratulations.
Thanks. I'm actually looking for, today I'm actually looking for a dollar bounce, and
Okay.
We were just discussing about well, here, let me go over here. I actually think the euro is coming back down towards the 116 level. You were just talking about the dollar CAD. We were just sitting in the chat room talking about the 88% retracement being tested. If you look at the analysis from this morning, we have a 88% retracement of the long term, and then also the 88% retracement here at the 133.70 that's holding. And you guys have to also keep in mind, as the euro dollar has been breaking out, and same with the cable too, the dollar Canadian has not. And it's very similar to the US dollar Mexican peso, which is divergent, which was my chart of the day yesterday. So I'm thinking that here, let's go over to an hourly chart with the euro. We have this double top here in the euro, right?
Yeah.
That probably is going to lead us back down towards 115 again, which is fine because that's a breakout point. So 115 and 115.20. You have the Kiwi, which if you guys use ForexAnalytix, you already got this analysis. For those of you guys that are just sitting there going, what do you mean? Yeah, this was posted, earlier this morning, double top. The Kiwi looks like it's going to break now. So, that'll take us back down to 66 and change. And that's fine, because remember, this is all, if the, move this over here. I mean, if you're looking for dollar weakness like I am over time, I want to see this. I want to see a pullback, because I'd like to get long back down here at the breakout point. The only way you're going to do that is if you see some sort of pullback. So we're getting a little bit of a pullback here, and that's, like I said, that's what you really want to see when you're trying to establish another position back into the market. You don't want it going straight up, because then you miss the trade, and then B, the risk of slipping back on you, while you're like trying to get into the trend, it's really highly possible. So anyway, that's what I'm seeing here. But let's do this. Since I'm already going over this, let's actually write down everything in the meantime. So we'll just put it back on the bias chart, which we need to do anyway, because I'm trying to do this for you guys every day. So the euro dollar looks like 115 roughly. Well, I'm going to write down 115 even is support. That's going to be really key support on any dip. I just don't think we're going to, let me draw this out again, how this works. Okay. So, and let me delete this, because this will make more sense if I can just remove that and grab the drawing tool. Okay, everybody sees the 115 as a big breakout point. Why? Because again, this is like our major breakout, daily chart. 115, we cleared that from back in March. So any type of dip back down towards 115, you're going to find buyers. I mean, you're going to, all right? So here's the hourly chart. So now you have to imagine, here's orders here, here, here. Gosh dang it. There's orders here, 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 here. So you see how it's getting darker and darker and darker because there's more and more and more and more orders as you get closer to 115. So that's what happens is when you get a drop down towards support like this, sometimes you won't reach that 115 because there's so many buy orders down here that it's because everybody's trying to get in front of each other, and that's gonna happen when you have like really key levels of support or resistance. So anyway, that's why I'll write down 115. I just don't know if we're gonna make it all the way down there, right? So hope that made sense. Resistance is obviously right now is at 116. Arabadina in our chat room, who's also a doctor in New Jersey, works on the so with COVID patients too. He pointed out yesterday that we have we have this long-term trend line, and the euro dollar comes in right around 116 and change, and which I think is a pretty good guesstimate, but it depends on how you draw that trend line. It actually might even come in at like 118 where the flag is at. So the point I'm trying to make here is we will have resistance in the euro, as we get closer towards 116 and a half. But I think for right now, resistance is 116. Still bullish. Let's go over to the cable. Cable, you notice we're making lower highs. I think we're going to be making a triangle here, if I had to guess. Which means
sorry to interrupt. If you can move your microphone a little bit further away from your mouth.
Okay. Is that better?
I'll tell you in a few seconds.
Yeah, let's keep going, and we'll tell you if it sounds
okay.
Too much.
So support will be here
better.
at 126. I would say 60, 50. Breakout point here is 126.70. You're gonna have support all the way down to 126.50. So I'm gonna say that 126.50 ish is support. Resistance is obviously 127.50, then 127.70. So and remember the 200 days at 127. So okay, still bullish while we're above this big broken trend line here. Okay, while we're above that trend line, it's still bullish. Aussie, we are coming off. Steve had a really good pattern in play. He pointed out this trend line, and it looks like the Aussie's going to come right back down towards 70.70, and that's going to be the breakout point. So that's going to be support. So for those of you looking to get long, that's probably going to be trying to wait for it. I mean, obviously, trying to be patient, wait for it to come down. That's always the trick, right? So hopefully it'll make its way lower before we finally break higher. Obviously, resistance is going to be 71.80 roughly. Kiwi. Oops. That might have been a Freudian slip. All right. Any dip back down to 66 cents is going to be regarded as a place to be long. Okay. 67 cents is still the cup and handle extension target. But the problem is that we're stopping shy of it. And so this resistance becomes very important, 66.88. Okay, still bullish though. Dollar Canadian. Let's pay close attention to the dollar Canadian, especially with crude oil starting to show some signs of weakness. The dollar Canadian, like I said, this 133.70 level is the long-term 88% retracement. That's pre-COVID lockdown move. Remember, we're back to filling the gap. So there's a lot of support down here for the dollar CAD. I actually think that this 33.55 level right here is going to be pretty key support. So I'm gonna write down 33.55, and as I've been telling you, I think you're seeing a lot of divergence here with the dollar Canadian, where you have the dollar that's actually breaking down against the euro, the Aussie, the Kiwi. It's not in the Canadian. So look, if you're short the dollar Canadian, you're probably pretty frustrated that it's not going down. So you got to think about that, near term, because people that are not getting paid much being on the short side, where the Aussie and the Kiwi have made them a lot of money, they're probably starting to think, man, I don't know if I really want to be in this trade anymore. So
Great observation, Blake, of it
Well-
not performing in accordance with the other commodity currencies.
yeah, I mean, when you like, let's say you have a basket of commodity currencies, you're long Aussie, Kiwi, Canadian, some emerging market currencies, like you're long the peso, and you look around and you're like, man, I made a lot of money in the Aussie and the Kiwi, but the Canadian and the peso I just haven't done so well in. What any smart money manager is going to do is they're going to take the losses first. They're going to say, okay, I don't want to be in the Canadian and the peso anymore because they're just not performing well. And then they're going to, hang on to their winners, keep your winners, cut your losers short, right? So same rules apply when you have something that's not working out for you. So for right now, any rally back to 134.80.
Blake, would you mind showing your crude chart so people could see how it's losing momentum and might be rolling over? I know it's not in your bias chart, but
I will. The problem that crude has right now is if you look at the continuous contract, these are the lows and also the days of our life, but these are all also the lows right here from December of 2018, June of 2017. It all comes in at 42. You got the 200-day moving average right here.
yeah.
I mean, look, we're struggling, to get above there, and so
Like the oil sands in our life, so are
the
the days
oil
of
sands
our
of our
lives.
lives. That's correct. You watch way too many soap operas, I'll tell you, in the 80s.
Better than living one.
Yeah, that's true. That's a good point.
But I do that too.
So anyway, okay, I'm going to get back into the charts
All right.
here.
Thank
Let's
you,
go to the
Blake.
dollar. Yep, dollar Mexican peso. You got to keep an eye on this one. This is the chart of the day yesterday. It's not going down. It's really struggling on the downside. So resistance now is 22.55. Support 22.16. It's in a range. Same with the Canadian. Dollar Swiss has gotten smashed as of late. And man, it's now we're oversold, and I think there's a risk that we get some sort of snapback rally here. Let's check something. 88% retracement comes in at 92.65. That low is support today. Look, if you guys want to, I'm not taking this trade, but if you're really like a dollar bull and you're like, I'm going to take a counter trend trade, why not get long the dollar Swiss and just put your stops below this low? Pretty oversold 4 hour. You might get a bounce back to 93. I think the risk is a bounce back towards 93.55, really, but it's bearish. But you know, just because you have bullish euro right now, bullish KO, doesn't mean you can't make money counter trend. It's just if you go counter trend, just take smaller positions. Like the dollar Swiss is bearish, but if you're going to get long, like let's say you typically buy and sell 10 lots at a time. If you're going to trade counter trend, buy 3, or buy 5 instead of 10. You know what I'm saying? I'm just using that as an example. Okay. U.S. dollar, Norwegian krone. This is another place that I was just talking to my colleague in Greenwich, and he's like, here's another place people have been hanging out. I'm like, yeah, because it's been a slow grind being long the Norwegian krone, and now you're back at channel support. That support comes in at 9.02. So a break back above 9.20 would cause a little bit of a short squeeze. Again, it's bearish, but let's just imagine crude oil, which happens to be on the lows right now. Let's imagine it keeps hitting new lows. What happens here? Do you get a bit of a squeeze? You might. I don't even want to look at the dollar yen, by the way. I know the levels. You should know the levels. There we go. Without even looking. Dollar index. So horizontal support, 94.63. I think any rally back to 95.50 is going to find sellers. So basically 94.60, 94.60, 95.50 is key resistance. And if you get any bounce in the dollar, that's the place you want to be a seller, right? Because I think the dollar is bouncing today. Well, it's fine. Let it bounce. Then you sell in the strength. Get it? Okay.
Get it.
Gold. Huh?
I get it.
Get it? Good.
Yeah.
Okay. Let's gold. Gold. I mean, I'm thinking that it's obviously overbought. Relative strength is. Yeah. I mean, we could actually stretch higher via RSI. I mean, we're really close to all-time highs, which comes in at what, 1920, 1923. I mean, I think we're eventually going to break out. It's just, would I be a buyer, like trading wise here? No, I'm really hoping we get a dip, but 1820, I think longs would be salivating to get 1825. Oops. Support. Salivating. And just so you know, I was telling the guys and gals in the chat room, I bought all my physical silver at like 15, 16 bucks. I went bought a bunch of physical silver, physical gold at like 1,300, I think. So once silver gets back into the 30s, I'll probably, look to sell some and then just keep the rest. But anyway, it's silver. Silver, any move back down to 20 is going to be a buy, in my opinion. So question, do we get all the way back down there? Resistance right now for silver is going to be, up here, which comes in at 2370. But going back to gold, I think I got to write resistance. So the next resistance is obviously 1923, which is the all-time highs. Right. S&P. Here is the SPOOs. Where is it? Do we have data coming out? We do. You guys need to.
We two jobless claims
Yes,
coming out
we
right
have
now.
jobless claims.
You guys, I know I'm so mesmerizing with my what I'm saying, but you guys got to remind me about this stuff.
1.4 million initial jobless claims, continued
worse than expected.
jobless claims at 16.2 million, which that one is better than expected.
So dollar yen's coming off just a little bit. All right, I'll just go do the S&P. I think it's the same as yesterday, pretty much. Support 32.35. Oops, 235. Whoops, 32.35. Is that correct? $32.35. Next resistance is 33.16. All right, your bias chart's done. How are you guys doing today?
I'm very well, thank you. How are you?
Good, mate.
Good. Just continuing claims fall to 16.2 million. Okay. So actually the jobs numbers a little bit of an improvement, you know, as the economy is trying to repair itself. Yeah, just doing all right. Just kind of sitting here trying to wait for some stuff to happen. I do think that we're in a dollar bounce day today, you know. So, but the question is, how far are we going to go? The euro is in such a strong uptrend. You know, this bull flag pattern that we've been talking about for forever and a day. I mean, it's got further to run, but we're getting to some pretty key resistance. So I'd imagine that we get a little bit of backfilling, but the question is, how far are we going to really pull back? You know,
I think it depends on the stock market.
Yes, absolutely.
Yeah. You guys are probably right. And, you know, I sit here and I look at this pattern, when you have a double top like this, when you're trying to go counter trend, I would not be surprised if that does not finish. So in other words, we may break support. Everybody tries to get short. And then, you know, all we do is we just, you know, find some support there and then rally back in the direction with the trend, get everybody caught short and then start squeezing again. So I'm not a big fan of trying to trade counter trend, you know, double top here, not this big of a breakout that we've got. So anyway, just some food for thought there.
Makes sense.
Yeah.
Makes a lot of sense, actually.
Anyway, well, hey, I'm going to let you guys take over and get back to your analysis of the markets. Here's the bias chart. One last look for the rest of you guys. I know we got to give Steve the opportunity to talk because he's not going to be talking for a week. So we got to let him get his fill. So, all right, guys, have a great one. I'll talk to you soon.
Thank you, Blake.
Bye-bye,
Thanks,
mate.
guys.
Nice review, Blake.
Thank you.
Hey, Dale. Hey, Steve. How you
Hey,
guys doing?
Steve.
Hey, guys.
Good. Yeah, so that was a good summary by Blake, actually.
Okay, we're done then. Bye-bye.
Yeah, okay, see you tomorrow. Let's start with metals because they have been the main movers. I think I agree with Blake. I think we are close to some kind of short-term reversal. DSI, RSI, everything positioning is quite bullish. So I think we should see a reversal. I closed some of my silver 22 between 35 and 40, 22.40, I think, yesterday. Obviously, I didn't get 23s. I'm not good at getting tops and bottoms, that's for sure. But I closed some, and I would love to get somewhere between 19 and 20 to get along again. There's one of our friends who was asking, you know, why don't we have a pattern in play in silver? Because we have been talking about it. Personally, I'm very comfortable having, as in this example, a long in something that can go deep against me when I think it's very good value. So silver in the March low, in the the depths of the crash, I think I was down 10% or something like that, or 12%. I was very comfortable doing that, but for our patterns in play, I wouldn't do that. So
yeah, and the average person is not okay with that.
Yeah, so I don't want to do that there. But you know, if you're following me on the chat room or here on Face, I've been saying this for months now. This is a position I've had for about a year and a half, and it was going nowhere, and now it's up like 35-40%. So that's you know, timing is difficult, but I was you know, I still am very confident about this. So I am going to be looking to buy dips. Gold is a different
Patience
story.
rewarded.
Yeah, but gold is a slightly different story because it's very close to all-time highs. I think we might get there, we might break them, and then get a whole lot of bunch of people bullish, and then maybe then we go lower. I don't know, but I think we're going to see a dip in both gold and silver. I'll be very surprised if we don't. And,
I have the perfect topping indicator for gold. When Henrik capitulates.
Yeah, I knew you were going to say that.
Then why did you ask?
Yeah. But yeah, I mean, nothing goes in a straight line apart from Bitcoin in 2018 and Tesla now, apparently. But I think we're going to see a correction. Same with the dollar pairs and the DXY. They will depend on risk on, risk off. So if we do get, I know it sounds crazy, but if we do get some kind of pullback in equity, any meaningful pullback in equities, then I think we're going to see dollar strength coming through. And like Blake said, the Canadian dollar is really at the crossroad here at 134, whatever it is. You know, we could go lower towards 130. We could go a lot higher. So it depends on equities, and it's all very finely balanced. And you saw we are in earnings season now again. You saw Microsoft beating, but I think guidance was lower, so they're underperforming. But Tesla, what can we say about Tesla? They're finding ways to make it look like they're making money, don't they?
Yeah.
They what was it that they did? They sold regulatory credits of around $500 million to other car makers. I don't know how that works, but bottom line is they managed.
Yeah, 400 and something million. Yes.
They managed to show a profit, which is was required for them to be eligible for entry to the S&P index, and it looks like they're going to go in. So that's going to be a lot of index funds and all that. They're going to have to buy Tesla, and you know. So I think this is
even if you take at face value this profit, which, as you said, it was due to 400 and something million sold of credits, emission credits, then even if you take it at face value, still Tesla is trading at 800 times P.
That's crazy. That's crazy.
I think it's, you know, it's a very fair place to be buying the stock for the long term, right?
That's like the most speculative tech company would trade there. But or you know, biotech, I don't know. Anyway, it is what it is. The market tells you what fair price is, and at the moment fair price is where it is. But my point is that equities are going to, well, they still look pretty strong. We're still in earnings season. You know, it only takes what was it, FANGs now make up around 15% of the S&P index, which is huge for 5 stocks. And you know, they keep performing well. Facebook, Amazon, Google, you know, they're doing pretty well. So as long as they are doing well, it's very hard to see the index dropping. I still think it will, but will that be before the elections? Will that be, sorry? Oh yeah. Will that be after the elections? I don't know. You know, it could really grind. It really could. But I do think we're going to see another leg lower. I'm not long, I'm not short. I'm just waiting to get long a lot lower than here. What else was happening? We had numbers. Yeah, we had jobless claims. Okay, we saw those. Nothing to write home about. COVID infection numbers still high, going higher. I think we passed the 15 million mark globally. We're seeing big jumps in Brazil, like record numbers in Brazil. There are more lockdowns, travel bans being imposed. And this is still in the middle of summer. So, you know, I would be quite cautious. I still am. Having said that, equities still seem pretty strong. I don't understand them, so I don't have a position in them right now. But like our friend says here, don't fight the Fed. Yes, the market is high on stimulus. Yes, I agree. But at some point, you know, fundamentals have to come in play at some point. to what degree? It's a good question. I mean, it's very difficult to say if we knew we'd all be billionaires. So
yeah, as we've said before, though, there is a better way to be in the same direction with the Fed without seeing nightmares at night that you might wake up and the bottom might have fallen off from something that is undoubtedly extremely overvalued, and that is be long monetary metals.
yes, I agree.
I mean,
with
if you
that
don't want to
100%.
fight the Fed, what does the Fed want? The Fed wants inflation, 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 and that's why they're creating so much of it. With,
yeah, and not
you know,
not reported inflation, asset price inflation, right?
yeah, I mean, no, I was talking about inflation, the traditional definition, which is the expansion of monetary supply. Of course,
Yes.
you know, it first spills over to asset prices. I think that this overdose now of monetary supply expansion that we have, though, will end up spilling over everything else as well, which means retail prices, etc. So, you know, of course, we'll see about that. But in any case, you don't want to fight the Fed. You know, there is a way that will let you sleep much better at night, be long monetary metals.
Yeah, absolutely. And, you know, I never thought I'd say this, but even if you don't like monetary metals, even cryptos, you know, eventually I think are going to go higher. Again, I'm not
eventually everything is going to go higher.
I'm not a believer in cryptos. Maybe I'm too old for them, but you know, they if you limit supply, which they seem to be doing, although you can make 1,000 new coins, but you know, the traditional ones, Bitcoin, Ethereum, the limited supply, monetary supply increases exponentially, then
speaking of them, Stelio, I don't know if it's a signal for Bitcoin as well, but Ethereum had actually been, I wrote it in the previous weekend's analysis and the one prior to that, Ethereum was trapped for a couple of months in this rectangle, in this range, and actually yesterday it produced quite a massive move out of it. So that is, you know, definitely a bullish breakout here that we're seeing.
Yeah. And if you scroll back, you remember where Ethereum was?
So
like,
yeah, so far Bitcoin hasn't done, you know, the same type of move. But let's see. I mean, I'm carefully monitoring here because I remind you that Bitcoin is actually facing this massive trendline resistance, which dates back to the mania high near 20,000. I think that's going to be quite a significant trend line to break through. Might actually have equivalent implications with the silver and it breaking through this long-term trend line resistance, which we saw what happened once that happened, right? So I wouldn't find it unlikely Bitcoin breaking through that if it happens to produce you know, a similar kind of explosive move to the upside.
Yeah. Cool. Elsewhere, we had some minor data. Norway unemployment a little bit worse than expected. Mexican CPI a little bit better than expected, but really nothing worth mentioning more than that.
By better, about the CPI, are we talking about economics or the perverse definition?
higher than expected.
Okay.
Yeah. And tomorrow we have quite a bit of data. We have retail sales PMIs from UK, Europe, US, so that should be interesting. But very little today, apart from what we had. And that's,
okay, at least we got ourselves, you know, some things moving in this market, because, you know, it was getting, until a few days ago, it was getting really, really boring. I mean, summertime is never, you know, the ideal period of time to expect like volatile markets. Of course, there are always exceptions, but at least we got this move in the metals, which spilled over in the dollar in general, and we've seen the dollar significantly underperform. Now, clearly, and you know, Blake mentioned that, keep in mind that the DXY is testing a significant area of support. You can see it here. Almost touched the, actually, that was what, a 2-year low more or less, almost 1.5 to 2 year low that we had in March at 94.65. We came very close to it. Now, as we said before, the only real chance for the dollar to produce some type of a rebound from here is for the stock markets to turn lower, because I don't think that if risk remains, in any case, well bid, or even if it pulls back, but it does it in a soft manner and not in some kind of a massive move to the downside, which lately, as I've warned about it, that's what you get. You get like, on average, let's say out of 10 days, you get 9 days of a drift lower, drift higher, and then you get a 10th day that you get quite a big move to the downside. That's on average what you get nowadays. In essence, it's more something like, you get 18 days, let's say, of slowly drifting higher in most of them, and then you get a couple of days of a big sell-off, and then a rinse and repeat. I don't think that, it's very easy to see this market softly pulling back. It's more likely to do it in a sharp manner than anything else, if you ask me, because, whenever they let loose of whatever control they have over it, gravity will immediately pull it lower, because, under any kind of metric that you want to, examine these markets, they are, massively overvalued. I do think that it's more than clear, especially, you see the S&P underperforming. I mean, the Nasdaq is pushing new all-time highs almost on a daily basis. The S&P is barely higher than where it was, a month ago, in essence, 5 weeks ago. And I do think that we're probably going to see a sharp move lower, probably before we invalidate this divergence. And by divergence, I mean the fact that the Nasdaq is trading comfortably at much higher highs than we had, before we turned lower in February, while the S&P doesn't. Same deal here with the Dow Jones. Dow Jones also some distance from its highs. An extra divergence, and that's why although you know very well that I rarely talk about the Dow Jones, because I think if you cover the Nasdaq and the S&P, there is no real reason to go in the rest of the indices. Sometime I'm going to also look at the Russell, because it has very specific characteristics, since the vast majority of the companies in the Russell are local. So it gives you a good idea more of the local economy. But keep an eye on a third divergence here, right? The Nasdaq is comfortably a lot higher than the February highs. The S&P is lower than that, but at least higher than the June highs. The Dow Jones is both lower from the June highs and, of course, the February highs. Okay, so I'm seeing all the signals and divergences. Same deal, by the way, with the IWM, the Russell, as you see. Not only lower from the all-time highs in February, but also lower from the June high. So I think that this market is really running out of steam, and we should see some type of a sharp correction lower, sooner rather than later. Most likely they're going to buy that as well. Might be quite a strong one, but it might last just a week or whatever. But don't underestimate the ability of the market. For example, if we're talking about the S&P, don't underestimate its ability to be within like 1-2 weeks 500 handles lower. It can happen, right? I mean, they're going to jump in and support it. There's no question about it, but it can really happen. Clearly, such a move, because that's where we started from, is going to support the dollar. It's going to be short-lived, most likely. It's going to probably, fail in, significantly bringing it higher. I mean, one area of resistance I would look for in that case, the first area of resistance would be roughly at 96. The next one would be just above 97.50. And above that, we would be talking about, just below 99. I don't think we can easily make it above that, even if we see a sharp move lower in indices. I think that, a move lower in the indices is going to be disproportionately disproportionate to the rebound in the dollar, because I see the dollar being weak for many good reasons, and I think that that might persist. Now, Blake mentioned before about the Aussie. I want to specifically start from the Aussie if we're talking about effects, because in my eyes was one of the most clear patterns here in effects for two reasons. Because I both thought that this type of a symmetrical triangle has a huge chance of breaking higher, and that's why I traded it long. But I also had a significant confluence of resistances there, and given the fact that I know that most of the times triangles are terminal formations, I expected that one move higher might be what's needed before we see some type of a deeper move lower. Does that mean that, we're seeing the beginning of it just because we had a pin bar yesterday and we are attempting, it's still early on the day, to push lower from here? No, of course, the evidence is still, insufficient, right? I don't question that. But I am saying that I am seeing an attempt. I've closed my position. My pattern play was also closed. I took my profits here, so I don't have any stakes in this one anymore. But I am saying that the risk reward against yesterday's high seems definitely appealing, because we're currently trading at like 71 cents. The high was at 71.90. I think that, at the very least we should, retest this. At the very least we should retest the breakout area, if not more than that. Also, one more thing I want to say, sometimes you're not really sure in these cases. It's the question of the Columbus egg, as they call it. You're not sure which creates what. I mean, will the dollar strength here spill over to equities, or is it just that FX traders are a little bit ahead of the curve? Which, there is always the the belief, which I more or less agree with it, that bond traders are always ahead of the curve, then followed by FX traders, and the last people to know that something is brewing in a market is equity traders. The reason I'm saying that, and this is a good example if we're talking about the Aussie stock indices, and since I put in the equation bonds, let's talk about bonds. The reason I say that is because despite of what's happening, bonds have really been unfazed, meaning they've actually been trading at the highs. So bonds really seem to think that nothing is fixed here. And although they've really taken this market as they've nationalized more or less this market, as we've mentioned before and Dale has said before, I think it's still influenced by factors like risk perception or whatever. So we're seeing that bond traders have really not believed this risk on move. And speaking about today, we're seeing the Aussie turning lower since yesterday at some point, while stock indices were still pulling higher. And look at this, although we were higher on the day, S&P is attempting to turn lower. I mean, we've actually now created a gravestone doji, and let's see if we can get some type of a reversal from here. From a risk reward perspective, as I said, it's definitely appealing, and several divergences are in play at the moment. Now, if that happens, if we do get a reversal in stock indices as well, we might finally get some type of a corrective move in the metals, because we know that initially along with stock selling, you get some precious metals selling as well. So, silver is already, working on some kind of a correction, which might be very short-lived, of course. Gold is still positive on the day, but has a decent upper wick. Clearly, there is no more risk reward in being long in the short term. I mean, you want to be long gold and silver, you don't want to do it here. You want to do it after a decent pullback. I mean, ideally speaking, in a perfect world, I would want to see a retest of like 1822, 1823 in gold, as we were discussing previously with Stelios before the webinar. In a perfect world, I would want to see silver retest the breakout area at 19, 20, 1930. Now, is that very, very likely to happen? There's some distance, and I do think, as Blake very correctly showed, when the market has a clear trend, what happens is that you put you set your eyes on a specific target, and you tell yourself, oh, I would love to buy that pullback. But then there are a lot of people that are thinking, let's take the example of silver, right? A lot of people are like, oh shit, I should have bought this. I mean, I was thinking to myself, silver should be moving quite higher, and how foolish I was. I didn't actually do it. I need to get myself, to get my hands on some silver. Where would I want to buy it? And, they're looking at the chart and they're like, oh, I would want to do that at $19. And then they're thinking like, yeah, something. So many people will be looking to buy it at $19. I think I'm gonna put a bid at 1950 because we might not get it like $19. And then there are other people that are thinking, something. There are a lot of bids gathering up between 19 and 1950. I'd rather get some exposure than no exposure at all. So, something, what the hell? I'm gonna buy half of it at $20. And if we happen to go lower, fine, I'm gonna buy another half at $19. And that's how bids get accumulated, and then you're looking at $19 as the perfect pullback level, and then you never get there because there are a lot of people that are interested in buying it, and they know that there are many other people that are looking to buy as well, and they're like, I'd rather get some exposure higher at a worse price than no exposure at all. So that's why in strong markets, you frequently don't get that perfect technical pullback you would wish for. Let me see how many questions. Dale, do we have an interview today? Let me have a look at a few of the questions. So USD NOK, USD SEK, let's start from there. So here's USD NOK. So USD NOK, trying to find some type of a bottom here. Something at some point it's going to rebound. There's no question about it. And going back to the triangle rule I was talking about before, that last move lower might prove to be terminal. By terminal, I've said it before. I think this was probably a generational high above 12. But that doesn't mean that we're not going to get any rebounds, right? I'm still short USD NOK. I mean, I'm very deep in the money. Same with Euro NOK, and I don't intend to, to sell that position back in the market. I'm actually looking to accumulate more at any decent rebound. Still very early, to call a rebound. But if you want a little bit more evidence, you should look at USD SEK, which you're also asking about, because when I was asked again about USD SEK, I don't remember if it was yesterday or the day. I think it was the day before yesterday, actually. I said that, listen, if you're looking for a level for USD SEK, I do like the confluence of supports down here at 882, 883, because it's a 61.8% fib, from this move higher. It's also an extension, a fib extension from that terminal thrust that we had, which probably really killed any remaining shorts in this market, not only because it produced new highs, but it was also the vertical move in which it happened. I'm pretty sure that a lot of people just saw that and they were like, okay, I'm out, that's it. this thing is going to the moon. I'm just getting out of here. So very beautiful confluence of supports. So far, we're working on some type of a tweezer bottom here. Having said that, in order for something bigger to play out from here, I would want to see a move to and a break above this confluence of resistances. So as long as we remain below like 907, now 908, I think it's, there is no real reason why you should be long, unless of course, your trading style is scalping the market, or, taking like 1 day trades, 2 day trades, and, you're looking for a rebound towards resistance. Then if you're looking for medium-term positions, I would really not bother in being long at the moment.
Interview time.
Okay, Dale. Yeah, a lot more questions, but can't cover them all, right?
You'd be here till midnight.
I'd probably be here for at least another hour. I can tell you that much.
Yeah. Thank you, Steve.
My pleasure.
Okay.
Okay, so enjoy. I'll stick around until you have your guest
Thank you.
set up.
Okay, Mac. Welcome to Face. How are you? Can you unmute?
Hey, thank you for having me.
Oh, real nice to meet you, Mac. I really appreciate you taking time out of your day.
Yes, sir. I
And,
appreciate you having me on.
Yeah, so I went to your YouTube channel, and looks like you have a decent following. So, do you know have you ever used Zoom before?
I have actually used Zoom. I've done a couple interviews myself for the channel on Zoom.
Okay, so there's a Dropbox menu to share your screen.
Yes,
It's a green box.
absolutely.
And Sephora, yes, we record our sessions every day. You could go back. It'll be on Twitter. It'll be on their channel, as well as
Perfect.
Mac's interview.
All right, let me get this pulled up here.
So why don't we start with your handle? Why are your alerts notorious?
So Notorious Alerts, I created that handle when I first got into trading. Before I was a stock trader, then I was an MMA fighter as well. So,
Are you going to share your screen, buddy?
oh yeah, I'm sorry.
Yeah, you just have to hit start, and then we could see your setup.
Perfect.
Okay, so okay, great. So go ahead and tell us how you came up with the handle.
Did you actually
Yes.
say you were an MMA fighter?
Yes. So
That's quite
MMA
interesting.
fighter.
I've heard many stories, about people how they, from what field they came to trading, but that's a first for me.
No, I
Yes.
think there was one other guy we interviewed, Steve, that was was in that cage fighting type of game. So
Okay, that's interesting.
you knew how. So was Rocky Balboa an idol of yours growing up?
Always he was.
Yeah.
So interestingly enough, MMA and trading, a lot of the same mindset skills that you have to have, they're very correlated. So the discipline and just controlling your emotions that you have to have with trading is exactly what you have to have in MMA as well. So
It's all in our heads, huh, Mac?
yes, it's all in your head. I would say trading is about 80% emotional and all in your head a lot of the times. And you got to look at the chart and the technicals and be aware of what's going on. But then you have to have that emotional discipline and just trade like a robot. The ability to just take what you're seeing, read the chart, and don't psych yourself out and get FOMO or become a bag holder. So coming
So
over
you
to
have to be
MMA,
patient in the ring as well as markets.
you got to be patient and you
Pick your
have to
spots.
be yes, you got to be tactical. You can't go in there, you can't really have any dislike towards your opponent or be emotional, because then you're not going to stick to your game plan and you might just come out looking for the knockout, whereas a trade, you might come out looking for the home run trade when you need to be taking base hits. So it's very similar in
Good
that
metaphor.
sense.
So who influenced you? How did you, or are you self-taught?
So I'm a lot self-taught, but I owe a lot of my trading journey to one of my best friends. He's on Twitter as well. His name is Mullins Momentum. He was really the first person that I knew that was trading and doing well. So I tried to learn all that I could from him, and that was really my gateway into trading.
Okay. And mainly trading U.S. equities, international.
Yes.
What's your
So
focus?
my focus is U.S. stocks. So what I love to do is I love to do momentum trading, and I do volume scalps. So I trade wherever the volume is on any given day, and whatever the theme and the market currently is. I know recently with the coronavirus, then mask plays, vaccine plays, different pharmaceutical stocks have all been hot as of late. So
Yeah.
that's kind of where the momentum is as far as stocks go right now. And as of course the electric vehicles with Tesla, and some other stocks there. So whatever the theme is that has momentum, that's where I like to put my focus at.
And time frames that you're mainly working on with these kind of volatile shares?
Yes, so I always look at the 1 year, 1 day chart before I do anything to get the overall picture to see kind of what's going on with the stock long term. And
Yeah.
then I switch my time frame each day when I'm trading intraday. I go to the 5 day, 5 minute time frame, which we can see right here on JAGX. This is the 5 minute chart. I do have a swing position open right now.
Okay.
And we'll look at the 1 year, 1 day here as well.
Heck of a base.
Yes. So again, I like this chart because it does have a nice base down here, right above the 200 SMA, which is the green line that I have on mine.
So this equity is under $1.
So right now it is under $1, and my
Okay.
target is actually $1 on this equity.
Okay.
Let
What
me
are
zoom this
spreads
in.
like on an issue like this? Is this bulletin board, or actually it says NASDAQ?
Yeah,
It's
it's on the
traded on the
NASDAQ.
NASDAQ?
It is.
Huh.
So I almost exclusively trade on the NASDAQ.
I thought they had certain listing requirements that you couldn't fall beneath, because institutions can't trade a stock like this, right?
Right. It
Because it
has to
has to
be,
be.
yeah, it can't be
Okay.
trading below $1
Uh-huh.
for an extended amount of time. But stocks like this will often, where the float is low, you can see really nice runs or a potential reverse split to get the stock back above those minimum requirements. But with JAGX right now, I opened a position yesterday with an average of 71.5 cents, and my target on this swing is $1. And the reason that I like this stock is because it is a vaccine play, and a lot of these other low float vaccine plays have had really nice moves lately. And this is kind of one of the last ones to go. So I'm looking for this to get that vaccine momentum and follow suit with the other
Okay.
plays.
It looks like there might be some kind of news in play, because up until looks like late May, early June, there was absolutely no volume. What was that? What happened that day they had that big green volume spike? And you said you liked that. Was there news that day? Do they have an investor relations firm going out and paying people to buy the stock to create volume and liquidity?
JAGX, it's one of those stocks that it will periodically release news, and where the float is low, whenever the news does drop, then it does bring in that nice volume, which is kind of where I like to gear my focus towards.
Okay.
So
What's the
let's
spread
see.
out of curiosity, Mac? 75 bid, 76 offered on a stock like that, a penny?
So this one, it's actually half a penny.
Half a penny. Okay.
hmm
That's pretty
So,
tight.
yeah, I like to keep my spreads tight,
Mhm.
because, if a trade does go south, if you have too wide of a spread,
You
then
really
that can
get
just
killed.
make matters.
You get
Yeah, it
killed
can.
getting in, you get killed getting out.
Exactly. So, when you're taking a trade, you want to be certain of it, which there's
Uh-huh.
no 100% certainty in any trade that you take, but you want to be pretty sure and have a great risk reward setup. Um, for instance, with this trade right here, I already predefined my stop loss. So if it falls below 68 cents, then I'm out of this trade. And I would take a very small loss on it. And I have much more room for profit with my target being $1. And I'll
Okay, so
show you.
you actually place an order, a sell stop order is sitting out there,
Let me
or it's
pull
a
this over
mental
here.
stop.
It's a mental stop. I love playing with mental stops because the market makers, they can see your stops when you place them in, and I don't want to risk getting rated. And that goes back to having discipline to, if your predefined mental stop hits, then you have to be out. So,
Okay.
um,
Have
looking at this
trades ever
chart right
gotten
here.
away from you while you had a mental stop or you were away from your platform or market conditions, you had a sell stop, but there was no buying
Yeah,
coming in that, you really you took a hit because of market conditions and not having the physical stop order in there.
yes, that has definitely happened. It's sometimes
So you're
that is
honest.
the other, yeah, that is the other side of the coin. Um, that if you
Because
don't
Mac, the
have,
last time I used a mental stop, my first stop was a mental institution.
Mhm. Yeah,
Okay, anyway,
um,
I'm just saying I've done it, and then I rationalize. So you have the discipline because, you know what it's like to take a hit in the ring,
definitely.
and you know when to, perhaps be on defense and, just try and get through the round. So
Yes,
obviously you have more discipline than I do because when I use mental stops, it's usually, could turn into something dangerous for me. So
so
know thyself, right?
exactly. So what I'm really big on is opportunity cost as well. So you're always looking at opportunity cost, and I keep that in mind with my mental stops because, it could be easy to, like you said, get caught in, whether it be an offering or some sort of bad news that just comes out, and you could really get destroyed without a hard stop. And that has
So
happened to me in the
yeah.
past.
So explain opportunity cost to the audience.
Exactly, absolutely. So opportunity cost is something that you always need to be aware of because if you're holding a stock and it's just sitting there, it's not doing anything, or it's actually dropping, and you don't want to take a loss on this because for whatever reason, I feel like a lot of newer traders, myself included when I was new, when I started trading, I did not want to accept that I was losing a trade and see that money just disappear from my account. And I felt like if I would just hold the stock, then it wasn't a loss yet and it would eventually come back up. But in doing so, what I found was one, the stock would usually keep dropping and my loss would turn to a bigger loss. And I would miss out on so many other stocks that actually are moving and have volume to the bullish side, and I would be tied up in whatever stock that I was refusing to sell. And that's the opportunity cost, is
Yeah,
missing
that's a
all of
great
the other stocks.
explanation. I think everyone's been there. Really a good point to make where you're nursing a position
hmm
that's not working for you and you don't feel comfortable to assume more risk because you have a drawdown already and then you see opportunity after opportunity come and go and pass you by.
Yes, and that's
That's
the
painful
opportunity
too,
cost.
isn't it?
It
Painful.
is very painful because
Yeah.
that almost compounds to the loss that you're already taking in whatever position that you're in, because it's potential profits that you're missing out on. So
Right.
the way I look at it is, if I'm not making profits that I would have taken the trade on, then that's a loss to my account. So that's missed opportunity right there for no reason.
Okay. All right. I
Um,
think that's a great thing to cover because, uh, that's why it's okay. I teach, tell me what you think, Mac. I teach that the most important word for a trader is next.
yes, I completely agree with that.
Okay.
Um,
Next
the,
doesn't have to be right away, like revenge trading, but
no,
it's next. Did you journal in the beginning to get a handle on your strengths and weaknesses in trading?
I did actually. I would journal and I would go back and look at my trades um, each and every day. In the beginning, they were mostly losses. So what I would do is when the market would be closed and, I could think clearly and not have any new trader emotions attached to my thoughts, I would
Hmm.
look at the charts, my entries and exits, and try to understand why I took the trade. And most of the time, I found that I had no rational explanation as to why I was getting in a trade other than FOMO, the fear of
Right.
missing out.
Or you just
And
wanted to make money. You're scanning and you figure, oh, I'll give it a shot. Do you plan your trades?
I do plan
Like
my
over the
trades.
weekend, you do your research or during the week and you know what you want
Yes.
to do before the market gets there?
So it's about 50-50. I do plan my trades, but sometimes if the market gives conditions that I was not planning for, then I have to react with what the market is giving me as well.
Okay. All right.
So yes, I try to stay current on, again, what the current momentum themes are in the market, with what's going on in the world news, and how I'm interpreting that news as to how it could affect the stocks. Um,
You ever attacked indexes where you're just trading general market direction rather than specific issues, or are specific issues your bailiwick?
Specific issues is generally where I like to stay,
Okay.
because it is rare that I hold a stock more than a couple days.
Okay.
So I just try to capitalize on the momentum.
Okay. All right. And what do you use for screening? Just, because we have COVID, and biotech became very popular in search for a vaccine, and maybe the
Yes.
theme changes. Say, for example, there was an oil cutoff in the Strait of Hormuz. You would start uh, looking at energy issues. Is that really you just go off the fundamental flow of what Robinhood traders are paying attention to and just look to take a piece out of the market? Is that your style?
Yeah, that's largely my style. And what I like to do as well is, can you see the FinViz screen that I have
Yes,
pulled up?
got it.
So I do enjoy getting on FinViz and looking at the top gainers um, in the market to kind of see where the biggest percent gains are, which
Yeah.
today it looks like it's MIST. Um, and that is a biotech stock.
Okay.
So I kind of like to see where a lot of action is going currently. And then I will
Yeah.
scroll down and look through these. And a tool that I love to use um, is biofarmcatalyst.com. So
Okay.
this is a
A
great
subscription
source.
service.
No, it's actually free. This is a free
Mhm.
website.
Okay.
Um, so I like to go here and look at the FDA calendars. Get
Right.
this to load up here. And I love looking for catalysts that are in the near term
Yeah.
that could indicate, that there might be a run up leading up to whatever catalyst date is listed.
Well, I
So
see the first one, Alec, is working on my problem.
yes,
What's your name again?
my name.
Yeah, frontal temporal dementia. It was a joke. Anyway, do you ever play the downside of these, Mac? You ever short issues? What were you doing when everything was falling apart into the March low? Were you still trading the long side? What were you doing in that panic?
So in that panic, honestly, I had a really, really great time with trading, because with the low float stocks that I trade, all the vaccine plays and the
Yeah.
mask plays were running wild because there was so much fear associated in the market and the world as an entirety. And any play associated with COVID, if news
Yeah.
would come out that COVID is in the headline or they're doing a potential vaccine play, then you would see crazy movers.
Mhm.
And it was really fun trading those stocks on the long side.
So it's kind of like what Jim Cramer says, even in a crash, there's a bull market somewhere.
Exactly. It's all about finding that opportunity and taking advantage of it.
Yeah, that was really fighting a bad tape for these things to be performing in that. But, uh, you know, congratulations.
Thank
So
you.
what kind of business model do you have? You trade yourself? Do you teach other people? Do you have any kind of service that you market?
So I just trade myself, and I do have my Twitter account that I try to help newer traders through my tweets,
Yeah.
and the YouTube channel as well. I try to do a lot of, I try to emphasize psychology more so
Okay.
than fundamentals or technicals, even though that is very important. I feel like there's a lot of great sources and information out there that people can um, get down the technicals and fundamentals from people that are far better equipped to explain that than I am. So I like to put my focus on the psychology and how to manage your own emotions during trading these markets.
Okay. Give us a tip about how do you stay in a trade? Give me a tip. How do you stay in a trade to objectives and have the discipline to do it instead? Do you sell part of your position to satisfy your near term or
So
have, I mean, I'm
for
going to go
me,
over a few psychological issues. I call that first daylight syndrome, where
uh-huh,
you have money made and you take it right away. So how do you
yes.
overcome that?
So for me, what works that allows me to overcome it is whatever trade that you're going to take, you analyze it properly. You don't just blindly buy a trade for whatever reason because you see that it's moving up for the time being. You want to analyze it, look at the charts, know where the support levels are, know where your resistance level is, and predefine your plan before entering the trade because it's
Mhm.
much easier to be thinking clearly before you're financially invested in a trade.
So what's your
Then
self-talk? Say like this trade right here, you have a $1 objective for JAGS, right? And
yes.
you're long from say mid 70 cents and we're trading 85 cents. Are you willing to risk that dime or 12 cents to make another 12 cents? And how do you
So at
tell yourself to do that?
so at that point, it's about trusting the plan. I would have my stop loss predefined and I would have my target. And as long as extreme bearish volume or sell off doesn't come into play, then I'm going to trust the plan.
Okay.
With
You are
stocks like this,
disciplined.
with low float stocks,
Yeah.
um, if the move is over, it's going to be very easily to see because you're going to have large sell off very quickly.
Yeah.
And at that point, it's time to accept, okay, my target was $1. I didn't quite get there. Let me walk away with whatever profits that I might have. As
Okay.
long as you're leaving each trade with some profits, then it's going to be worth your time.
Okay, Didier, I could tell from looking at his screen that Mac trades on Thinkorswim. So that's a
Yes.
TD Ameritrade platform. What's the most important lesson that you teach new traders that you work with, Mac? You know, is it risk management? Do you tell them to be realistic about how long it takes you? How long did it take you to get good?
It probably
How
took
many
me
years?
right at 2 years to get
Okay.
good.
So, I mean, I've interviewed quite a few people. I asked that question quite a bit. So basically that's twice as fast as the average answer. And so the most important thing you learned before you made your after you made your breakthrough after 2 years was what?
The most important thing I learned was staying patient. Sometimes the best trade of the day is no trade at all. In the
Okay.
beginning, I felt like each and every day when I would wake up, I had to be in something. It didn't matter what I was going to be trading, I just had to trade anything. But sometimes the best trade is just to sit out and wait for that opportunity to come to you, because as traders, we don't get paid for the amount of time you're sitting behind the screen.
Right.
You could sit here 8 hours a day and actually lose money. You get paid per opportunity. And if that right opportunity isn't there, then you're not going to get paid anyway. So there's no need to take it.
All right. Well, I tell you what, if you walk your talk, I'm a believer, because you talked all about the important discipline. Obviously, you didn't get tagged enough in the head. You have all your marbles, Mac. And, you know, like
Thankfully.
it or not, after going through the fire with me on an interview, you're now my trading warrior brother. And, you know, you're my first MMA guy you have to back me up too if we get into a battle. But you're my
Absolutely.
trading warrior brother now, Mac.
Absolutely.
And I want to thank you for coming here and sharing some of your knowledge and talking about your journey. And I just want to show your Twitter handle. Well, there it is. You could follow him at Notorious Alerts, and it's Mystic Mac. And really appreciate you being with us. I hope that you and your loved ones remain untouched. Any vibe on, since you trade vaccination biotechs, you have a vibe on this COVID-19, how it's going to play out?
So from what I'm hearing, is there is going to be another wave that is coming through, and I think another wave of panic will pop up. So I would say keep vaccine plays, mask plays, potential even drone plays on watch, or food delivery service. Anything that correlates to the panic with the virus itself.
You
Or
think there'll
people
be
staying at home.
lockdowns again in the fall?
I think it's probable.
Okay. All right. Well, I appreciate it. It was great meeting you, and thank you so much for being here today, Mac. And I think that you're a good follow for people that want to spec in some of these low float issues. A lot of people
Thank you very
poo-poo
much.
them, but because they're high risk, but they're also high reward if you do your due diligence. So,
Exactly.
all right. So thank you very much, Mac. Good hunting. And that's a wrap for us today, everyone. We'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios. Thanks again,
Take care.
buddy.